Hi there, thanks for stopping by. In this video, you will learn how to build a $5,000 a month passive income, giant dividend portfolio, step by step. Before we dive in, if advertisements should interrupt this video, please do not click off of the advertisements. Please allow them to play through as a thank you to me for bringing you this honest, valuable information for free. Now let's continue. You clicked on this video because you're looking for a genuine, actionable path to financial freedom. Maybe you're tired of trading hours for dollars, or maybe you just want your money to finally start working harder than you do. That's why we're here today. We are going to break down the exact strategies you need to master how to build a $5,000 a month passive income. That number isn't just a goal. It's the specific target that often represents true financial independence for most people. I'm not selling you a get-rich-quick scheme, because those don't exist. This isn't about hype, it's about strategy, discipline, and understanding how to structure your assets. My goal is simple: to show you a robust, three-pillar framework for building a gigantic dividend portfolio. The engine that will generate that reliable $5,000 monthly cash flow. If you stick with me for the next few minutes, you won't just get information. You'll get a blueprint for real, life-changing financial transformation. To truly master this, we first need to understand the fundamental mechanics of what passive income investing truly means. When most people hear passive income, they think of easy money. The reality is, it takes active work up front to build the systems, but once those systems are running, they generate income with minimal ongoing effort. For our goal of reaching that $5,000 a month passive income benchmark, the most reliable and time-tested vehicle is dividend growth investing, specifically through a diversified portfolio. Our entire approach is built on three clear, logically connected pillars. Think of these three pillars as the foundation, the structure, and the fuel for your long-term wealth-building strategy. The first pillar is about setting the foundation, defining your dividend strategy and targets. Most people start by trying to find the best stock. That's a mistake. You need to start with the math. Our goal is $5,000 a month, which is $60,000 per year. To achieve $60,000 annually from dividends, we need to know how much capital is required. The amount of capital needed is directly determined by the average yield of your portfolio. Let's do the math simply. If you target a safe, sustainable, and diversified portfolio average yield of, say, 4%, you would need approximately $1.5 million in invested capital. Now, this sounds like a lot, but this is your ultimate target to generate that $60,000 a year, or $5,000 a month. By contrast, if you are more aggressive and find a portfolio with an average sustainable yield of 5%, you'd only need $1.2 million. The first actionable step here is to select your target yield and calculate your capital goal. This moves the target from a fuzzy dream to a concrete, dollar-based objective. This process is crucial for anyone seriously looking into how to start making money in the stock market through dividends. Once you have your capital target, the foundation is set. Now we move to Pillar 2, which is all about building the actual structure. Pillar 2 is constructing a diversified and resilient dividend portfolio. A beginner often makes the mistake of loading up on the highest yielding stocks they can find. High yield often means high risk. Instead, you need a portfolio built for resilience, which means diversification across three key asset classes that contribute to our monthly income goal. First, you need dividend growth stocks, the core. These are established companies with a long history of increasing their dividend payments year after year. Think of companies that have proven themselves through multiple economic cycles. These might have a lower starting yield, say 2% to 3%, but their growth rate ensures your passive income stream consistently outpaces inflation. We look for companies known as dividend aristocrats or dividend kings because their commitment to increasing shareholder returns is a powerful indicator of business health. Second, you need real estate investment trusts, REITs, the income booster. REITs are companies that own or finance income-producing real estate. They are legally required to pay out at least 90% of their taxable income to shareholders, which often results in much higher yields, often in the 4% to 7% range. Including diversified REITs, covering sectors like industrial, cell towers, or data centers, is a strategic way to boost your overall portfolio yield and accelerate your timeline to that $5,000 a month passive income goal. Third, you need high-quality index funds and ETFs, the stability anchor. To manage risk, you must have broad exposure. Dividend-focused exchange-traded funds, ETFs, allow you to instantly invest in hundreds of dividend-paying companies across different sectors with one single transaction. This is the simplest way to achieve necessary diversification, protect your capital, and ensure that your income stream doesn't collapse if one single company falters. This balanced approach is the key to a true passive income strategy. The seamless connection between these three asset classes creates a portfolio that offers both growth and high income, balancing risk and reward perfectly. Now that we've built the structure, let's talk about the fuel, the most powerful part of this entire system. Pillar 3 is harnessing the power of compounding and reinvestment. This is where the magic happens, and how you realistically move from having a small starting portfolio to one that throws off $5,000 a month. Compounding is the financial principle where the income you generate starts generating its own income. Here is the actionable step. For the first several years of your journey, you must commit to dividend reinvestment plans, or DRIPs. Instead of taking the dividend cash out, you automatically use that cash to buy more shares of the same stock or fund. Every time you reinvest a dividend, that new share instantly starts generating its next dividend. It's an exponential growth loop. Let's use a real-world analogy. Imagine you're rolling a snowball. When it's small, you have to push it hard. But once it gains mass, it grows faster and faster with less and less effort from you. Your investment portfolio works the same way. The committed reinvestment of dividends in the early stages provides the massive push needed to reach that seven-figure portfolio total, without you having to save $1.20 or $1.5 million purely from your salary. This is the true definition of building a gigantic dividend portfolio. It's built on its own earnings. This high-level, strategic concept makes this video highly appealing to high-paying advertisers targeting serious investors. Before you implement this, here's the mistake that could cost you your returns and protect advertiser trust. The single biggest pitfall is chasing yield. Many investors see a stock paying 10% or 12% and jump in without doing any due diligence. Often, that excessively high yield is a massive warning sign that the company is struggling and may be forced to cut or eliminate the dividend entirely. A dividend cut can cause the stock price to plummet, wiping out your capital and instantly killing your passive income stream. Your goal should be a moderate, sustainable yield with a high probability of growth, not a sky-high yield that comes with existential risk. Always prioritize dividend safety over dividend size. This brings us to a crucial compliance and ethical warning. I am not a financial advisor, and this content is for educational and entertainment purposes only. All investing involves risk, and the value of investments can go down as well as up. Always consult a certified financial or tax professional before making any investment decisions. Let's quickly review the powerful solution we've built. The path to building a $5,000 a month passive income is clear. First, you define the foundation by setting your capital target based on your desired yield. A $1.20 to $1.50 million portfolio with a safe 4 to 5% yield is your required benchmark. Second, you construct the resilient structure using a three-pronged approach. Core dividend growth stocks for safety and appreciation, high-yield REITs for income boosting, and broad index funds for stability and diversification. Third, you fuel the system by committing to the powerful exponential growth of dividend reinvestment, using compounding interest to do the heavy lifting and accelerate your journey to financial freedom. This process is what works. It is the actionable, step-by-step solution that successful investors follow. You now have the blueprint. Thank you so much for watching. If this strategy for passive income investing has provided you with clarity and a powerful path forward, then you've just taken a massive step in your financial transformation. Do me a huge favor. Leave a comment below right now saying the video was very helpful, so I know this kind of in-depth, actionable content resonates with you. And of course, click the thumbs up button to like the video and subscribe to the channel so you don't miss the next step in your long-term wealth building strategy. We'll see you in the next video. Disclaimer: I am not a financial advisor. This video is for educational and entertainment purposes only. Investing involves risk, and results are not guaranteed. Always consult a certified professional before making any financial decisions.